Hey, good afternoon, everyone. My name is John Gemini, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in about a minute and a half. I'll introduce our two subject matter experts and go over a couple things here. Today, we're going to cover what we just rolled out maybe 30, 60 days ago, our second liens, and it's been really very, very popular. And we'll share with you some stats here on why it's probably so popular, but we'll get started here. This is going to be recorded. Everything we're going to do today is on our really easy, great website, easy to navigate. Everything is here. We'll go through highlights of the programs. All your questions will come through a question queue. We'll try to get through them all today. If we don't, we will have your account executive reach out to you before, hopefully today, if not definitely by tomorrow. This is being recorded. We will get this out before end of day tomorrow. We're going to go over highlights of the programs. We're going to go over a quick quote. We also have a blended calculator right on our website, and we'll show you how to use that. And then we're going to go to, which I think is probably the most underutilized part of our website, our marketing portal, and show you guys some tips and tricks on how to generate more business for the rest of 2024. So give it about another 30 seconds and we'll get started here. Still have some people logging in. Thank you for joining us. Hopefully your February, and I gotta wish everyone happy leap day, right? You know, it's leap year. Today's the day, February 29th. So wishing all of you a great extra day in your year. So, and after last year, we could use an extra day this year. So we'll get started here in about 15 seconds. Just share some tidbits. We are seeing activity really picking up, so hopefully it's picking up for you also. So, all right, let's get started here. Again, my name is John Gemini, Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm playing an away game today, so bear with me if there's any camera audio issues. So, but I want to introduce our first subject matter expert. He's in the state of Arizona, Mike Hazlett. Mike, please introduce yourself.
Hey guys, I'm Mike Hazlett. I'm, like John mentioned, I'm the AE out of Arizona for Angel Oak. Been here almost 3 years now. I'm excited to talk about these new programs.
Yeah, Mike's a great addition to our company. And then a nice vet here, Chris Taylor out of the state of Colorado. Chris, say hello, please.
Hello, Chris Taylor. Been with Angel Oak 8 years. I'm in Denver and Handle, Colorado. So excited to be here.
Yeah, thanks. And again, today we're going to cover our second liens. We have two available to you. But before we jump in there, we're going to do a poll question, which I almost forgot about. That's part of the away game. Who has originated and closed a second lien in the last 12 months? So give some people some time to answer the poll. Just want to share with you some stats that I have down here. 40% of the homeowners in America today own their houses outright. That's pretty big. And I think there's there's $30 trillion in home equity. So keep a couple of those things, percolating in when you're thinking about developing your plan for the rest of 2024. So let's see what the polls here are. Wow, okay. That's pretty even. 57% have not, which means obviously 43% of you have. So hopefully, the 53% today, hopefully you learn a lot that will help you grow your business in 2024. So, so Mike, let's, this is our homepage. We're going to go over the closed-end second. Mike, go over some of the highlights, excuse me, of our closed-end second.
Sure. So the closed-end second has two options, really. It's got a full doc option, and we do have a business bank statement option. Let's see. The minimum loan amount is going to be $75,000 up to $750,000. These are 30-year fixed, 20-year fixed, 15-year, or a 10-year fixed. Two options are going to be cash out or rate and term, and these do need to be in the second lien position. We have the options for owner occupied, second homes, and non-owner occupied. We can do single family, townhomes, 1 to 2 units, and warrantable condos. The bank statement is going to have a slightly higher FICO requirement, so it's a 720 minimum, whereas the full doc is 700, up to 85% CLTV for both. let's see. Like I said, this is going to be business bank statements only, 12 or 24 months, and we qualify those, and you can get a pre-qual the same way as with a normal bank statement loan.
Yeah.
Full doc, 1 or 2 years tax returns or W-2s with year-to-date pay stubs or profit and loss. Up to 50% DTI for both programs. I do want to mention that owner occupied is not available in Texas, and the program in general is not available in Tennessee.
Yeah, but Mike, we're working on the Texas, so just stay tuned. So, yeah, Mike, thanks. So Chris and Mike, I'm going to kind of throw this out to you. We have some questions coming in here right now. Chris or Mike, either one of you guys want to run with this. What are you seeing from like a percentage of your business for close-end versus HELOCs? Maybe I'll throw that out as a question to either one of you guys.
Well, I'm getting a lot of response on the HELOC because a lot of times the borrower doesn't want to use all the money. They want to have it available to them.
Okay.
So that's winning over the closed end piece. So.
Okay, that's great to hear. Go ahead, Mike. Go ahead, Mike.
When the closed-end second first came out, was pretty popular, but I got a lot of questions on if and when we were going to come out with a HELOC. And now it's just the HELOCs are flooding in.
Okay, that's great. So then let's go, Chris. Let's have you cover the HELOC.
All
Highlights
right.
of the HELOC here.
So remember, if the HELOC is a line of credit, it's not a fixed, second mortgage. We have a loan amount up to 400 right now. It's a revolving line of credit, so it works just like a credit card. Minimum FICO is 720, and we will go up to 85% loan to value. The payments are interest only during the draw period, and the loan terms are from 15 to 25 years, so there's different draw periods available. We allow full doc, and I believe we're the only one that offers business bank statements, so that's really cool.
Yeah.
Really cool. And owner occupied second home, non-owner occupied, which is awesome too. It's for U.S. citizens, permanent resident aliens. There's no restriction on the funds used. They can be drawn by choice, and then it's also not available in Texas or Tennessee right now. Again, this is the biggest piece of this is your dormant customer base that's at 3%. You have a loan that you can offer them now. I'm finding in a lot of the scenarios I'm getting that the loans are being used to purchase other property. So, it's or home improvements. There's all kinds of reasons. So it's a good way to talk to your customer.
Yeah, Chris, and I love the way you use that dormant customer, right? Everyone, I'll throw out some other stats here. 63% of the mortgages today in this country, 63% are less than 4%, right? And 85% are 6% or less. So, and Chris, what I love that you're using that dormant account. Go back out there for, the last 4 years, a lot of you have closed a lot of loans, right? And now everyone's talking about, hey, these, the housing market, it's stuck, it's here, it's there, there's not enough inventory. This is a great opportunity for you to go out there, and I love the way Chris says, and call on what you think are dormant customers, right? So I'll throw out another stat, and Chris mentioned it here, is this is available, and we're probably one of the, if not the only one, to do a self-employed bank statement for a HELOC. And in the last 4 years, new business applications are over 22 million, and it continues to grow. So just think about those things as you mentioned. So a couple of questions coming in here, and I'll put this answer out there for Wayne. Wayne asking about a 3 to 4 unit. Right now, I'd probably say, maybe Wayne, but that's what getting with your account executive might be a great opportunity. We just rolled these out today, so I would say we're a little more stringent on guidelines right now, but in time, as Angel Oak always does, as these loans continue to perform and we make great decisions on them, we'll probably loosen up some guidelines. So, Chris, I'll throw this one out from Nancy to you. Can properties that are considered rural or have some acreage be used, Chris?
We do allow rural properties. That's our general guideline on owner occupied and some second home residences. So whenever rural comes up, I always, yes, we do them, but I really encourage you to show us the Zillow listing, the link, or show us more about the property, just so we can rule out other stuff with rural. So
yeah, Chris, and I think the other question would be that how many acres, right? You know, that's always a big thing here. So, but again, that's why working with, you know, people like Mike and Chris is so important, because they're going to ask those questions up front, and we're going to get to how to submit a prequel to us here in a little while. Mike, Charity is asking if you have a realtor that uses their personal account, is it doable, or does it have to be specifically a business account?
As of right now, it has to be a business bank statement account. However, we are working on, you know, allowing for a personal option.
Yeah, and I would also say, you know, we do cash out on personal bank statements, but it's not in the second position, right? We could do a full doc. I mean, a full blown, not a full doc, a full blown personal bank statement cash out for you. You know, and that is our most popular program, our bank statement program. So keep the questions coming, please. Chris, you mentioned the terms. Can you give us the specific terms for the HELOC and maybe what the draw period is?
we have a 3, a 5, and a 10-year draw, I believe.
Yeah, I'm gonna. Yeah.
I gotta look at it myself, but there's, you know, when it goes to pricing the loan, there's different pricing on the draw period. So the lower the draw period, the better the pricing. I think most of ours are running 3 to 5 year draw periods that I'm quoting. So
yeah, Chris, yeah. So we do the 20 year has a 5 year draw, the 15 year has a 3 year, and the HELOC for the 25 is only for full doc. So so you got Sherry's asking a question here. I'll throw this one over to you, Mike. There are, for self-employed only, not only people who have rentals, but maybe self-employed. I'm not sure I'm reading that question correctly, but so maybe the question is our HELOC, Mike, just for self-employed borrowers? It's not just for self-employed borrowers, right?
No, it's not. I mean, we have a full doc option. Like I said, we can go W-2. If they're self-employed, you know, we have W-2 or sorry, full doc or the bank statement option.
Yeah, and we might focus more on bank statements because it is really unique right now in the marketplace to have a bank statement feature for income for a HELOC. So Chris, talk a little bit about, you know, we always get this question. It hasn't come up here yet, but I know we're going to get it probably sooner or later. Talk about, Chris, how we calculate the income and maybe the expense ratio we're going to use.
So on the bank statement, well, on full doc, just in general, we look at it just like any other lender, Fannie, Freddie. With the bank statement, we're going to calculate your bank statements, and we always give you out of the gate a 50% expense ratio as a general rule. So now, you know, we look at the income, and most of the time, at least when we calculate the income, the 50% works with the DTI. But if for some reason it's tight and it's a you know, a business that doesn't have a lot of expense, the CPA could write a letter, an expense ratio letter, with a lower expense ratio, and we can use that as an advantage for higher income. You know, a typical bank statement borrower works out of the house. They might have lower expenses, so 50% might not be appropriate. So.
Well, and I think someone else asked this question earlier about what about a realtor? Well, you know, yes, we can't use personal bank statements right now, but you know, a realtor working out of a house could be as low as a 15% expense ratio, right?
Right.
Yeah. So, yeah, those are great questions. Rocco, we're going to get to the quick quote, and we'll talk about rates. And maybe this is, keep the questions coming in. So, and maybe this is a good time to show one of the great tools that we have available, and it's that blended rate calculator, because we're going to talk about our quick quote, and then Mike's going to also talk to you about how to submit a pre-quote to you, and then we're also going to talk about how to market these programs. And just back up here, this is being recorded. This will go out to you before end of day tomorrow, so just want to make sure everyone is aware of that. Let's talk a little bit, Mike, this great tool we have. It's our blended rate calculator, right? So this is, we talk about what's the rate on these, but let's go through an actual scenario here, Mike. So property value, what? $750,000, monthly insurance of $150, taxes $800. I didn't put in an HOA. The first mortgage we talked about earlier, how many people have 63% have rates less than 4%. So I put 3% in here on the first loan amount. And just so everyone knows, the average home since 2019 across America has appreciated over 45%. So as Chris mentioned, and I love that saying, that dormant account, guys, this is a way to go out there. So what I've plugged in here is a loan amount of $200,000 with a rate of 10.375. And you can see where this person's calculation is going to come out with their monthly payment of a 40 LTV with with the second lien payment of $1,800. And here's your blended calculation right here. Total payment, combined LTV, CLTV, and that's the blended rate. So guys, one thing I do want to share, I'm a big stat guy here, right? Credit card balances are over $1 trillion right now. And the average credit card interest rate is about 27.8%. So I go back to what Chris and Mike have been saying, guys, these are no longer dormant accounts. People have run up credit card debt. And last year in 2022, Americans paid $120 billion of credit card fees and interest rate. So guys, keep the questions coming. We just talked about our expense factor. So hopefully, Kimberly, that answered your question. Mike,
interject one thing, potentially there's tax advantages to having a HELOC too. So on top of if they're paying credit card debt off with a HELOC, it's secured to their usually their primary or their investment property.
That's a great point, Chris. That's a really, really good point. Mike, I'm going to go back to the home page, Mike. So take us through quick quote, please.
Sure. So like John mentioned, we have basically a pricing calculator right off our website. You do not need login credentials to access this. You just go to our main page, angeloakms.com. Make sure you see the bridge in the background, and then click on the non-QM quick quote icon, second from the left. Once you're here, you can price any of our non-QM programs. In this case, we're going to price a second lien. So go ahead and select second lien, input your second lien amount. If you're doing a HELOC, like Chris mentioned, it does need to be initial 80% draw up front. So you're going to do 80% of 200,000. Plug in your credit score. The remaining boxes below, make sure you put your subject property state in there. Like we mentioned, this is not available for owner occupied in Texas right now, and it's not available at all in Tennessee right now. For income documentation, this is where you're going to select your actual program. So for the second lien, like we mentioned, it's going to be 12 or 24 months business bank statements or full doc.
There we go.
Once everything else is plugged in, scroll to the very bottom and you'll see both the closed-end second and a HELOC option. Like we mentioned, the HELOC is an adjustable rate. So you'll get your rate as well as your margin to the right. And then from here, you can actually submit for a pre-qualification.
Yeah, Mike, I'm working on a little smaller screen than I usually have. So let me scroll over here a little bit if I can. Hold on. That's not, there we go. Sorry, guys. Sorry, bear with me here. So yeah, Chris, go ahead. So here's the rate stack.
So you can see here.
Sorry, Mike. I'm sorry, Mike. I apologize.
You can see your par rate. You can see the buy-down options, the cost of each, as well as if you're going borrower paid, you can see the lender credits offered. Scroll to the very bottom
Mhm.
after you select your rate and hit the select option button. You may get a blank screen. Go ahead and scroll to the top. This is going to ask you a 3.4 MISMO. If you don't have it at this point, no worries. You will need that whenever you go to actually register, lock, and request disclosures in our portal. So once you drop that in or not, go ahead and hit next. You'll have the terms up top. And then you can select your account executive, plug in your company's info, your information, the borrower's information, and then you can literally just drop in your 1003. It does need to be in a PDF, your credit report, if you're 1008, if you have it, and then the additional documentation. If this was going to be a bank statement loan, please keep in mind that our system does not accept zip files, so it does need to be in PDF format. Once you drop all those items in, at the very bottom, you can select, bankruptcy type, date of bankruptcy, any housing events, if applicable. You can plug in your comments so your AE kind of knows what's going on if you haven't talked to them yet. And once you hit the submit button, we're going to get an email pretty quickly with all the information. We're going to log in there, review, and if it's a bank statement loan, we'll submit those bank statements. And typically within 24 to 48 hours, we'll have that bank statement income for you.
Yeah, Mike, I thank you for sharing that. And a lot of our account executives and they're very seasoned and they kind of, a few of them will use, hey, they're your confessional booth, right? You got to tell them everything so they can do a really great job, accurate job up front, and not just for second liens, but for all the programs that we have available to them. So, Chris, one of the questions coming in here from Sherry, are you going to pull a hard pull credit report? Can you work with a soft pull?
We have to have a tri-merge hard pull credit report.
Okay. I did think someone the other day said we can pre-call. Again, it's quality in, quality out, right? Off a soft pull. So I'll double. Yeah.
If we were to take the soft pull on the prequal, you run the risk of the actual hard pull being not accurate. So,
right.
Or soft pull not being accurate. So,
yeah.
I just say as a gut check, scenario part of the process, we can conceptually approve it, but you always want to have the hard pull.
Yeah. Yeah, and the one thing I do like about Angel Oak and our account executives, anything that they do, if they're going to complete that pre-qual, any hesitation that they have, we have a help desk and we do that up front. And then maybe Chris, talk a little bit about the team that we have that just calculates bank statements.
Yeah, so I mean, the great thing about our pre-qual process is you're approved for credit and income before you go to underwriting, which is huge. And especially when you have like a TBD, you want to know you have a rock solid approval. So we have a team that calculates the bank statements. They get them back to us pretty quickly now. That's the number that the underwriter uses during the process. That number doesn't change. So it's really cool that we do that. The other cool thing is if we need help with a guideline exception, we also get that up front, and that's approved by our VP of credit risk. So it might be a situation that you have that you need approved. We don't have to worry about the file in underwriting. We get that approved up front. So
yeah, and that approval, Chris, just like the income you said, follows that file through the whole system.
Right.
Which is really, really great. Guys, I know we're going to talk a little bit more about marketing here. Anything else, Mike? I know it's kind of been, the close end's been out longer than the HELOC. What are you guys seeing, or what tips and tricks can you share, or other intel that you can share with our audience here today that you guys are seeing? We talked a little earlier about HELOCs are probably more dominant now than obviously the close end seconds. Anything else you guys can share with us that you're seeing to keep maybe someone else from stumbling out of the gate with this?
So we actually have, one of the common questions is, what do we do for appraisals? We actually have 4 options for an appraisal if it meets our criteria. So if the loan amount is 250,000 or below, or the LTV is 80% or below, you can actually do one of the following. Clear Capital AVM with a confidence rating above 87%. HELOCs do also require an exterior property inspection. We have the option to do a BPO, a drive-by appraisal, or obviously, you can order a full appraisal. I do want to mention that these loans do not allow for transferred appraisals, whereas on our first liens we do allow for a transferred appraisal if it's from an AMC. It does not need to be one of our AMCs.
Yeah, that's a great point, Mike. The question hadn't come up, but that's really, really good. Anything you're seeing, Chris?
I mean, I'm just looking at it more from the marketing perspective. Your realtor partners, your financial planners, attorneys. This benefits everybody. The realtors know that if that dormant customer can access equity, they might be able to buy another property. They might be able to solve a lot of their financial problems. So, this is also something for your referral partners to talk to on a regular basis. So.
Yeah, you said it earlier again, Chris, and they no longer have to be dormant accounts. And you heard some of those stats that, the credit card debt, $120 billion just in interest and credit card fees, $120 billion in 2022. That's just, and it's not getting less. And you saw how we did that blended rate calculator. You could take a credit card debt of interest rate of 28% almost, and with that HELOC second or that closed-end second, get a blended rate in the 5s and 6s. That's a great way to get yourself out of some debt at a much better rate. So
yeah. The other thing, helping their businesses, like it's accessing a line of credit for their business in a way too.
Yeah, and Chris, what did we talk about? And Mike, we've talked about how that self-employed borrower is continuing to grow and grow and grow. So let's go back to starting some of the questions we get on bank statements, right, guys? I'm starting to, those are starting to come back to my head. Mike, what if one borrower has business bank statements and the spouse is W-2'd?
So yeah, we can actually do a hybrid bank statement loan. I get these questions all the time. So as usual, both borrowers do need to be self-employed or employed, with their business for 2 years. But we can actually do a hybrid loan, like I said. Still no tax returns. Will require 12 or 24 months statements from the self-employed borrower, and 2 years W-2s from the W-2 borrower. And actually, the self-employed borrower only needs to make up 30% of the income total to continue doing a bank statement loan. So your W-2 borrower could make up the majority of that income as long as it doesn't exceed 70%, and you can still do a bank statement loan.
Yeah, which is awesome. And because of all, Chris, talk about, what you're seeing probably in the marketplace about borrowers who are actually keeping their W-2 and then starting their side hustle, right?
Yeah, I've done a loan with a borrower that's both self-employed and a W-2. As long as they've had the jobs for 2 years, you can do both. But yeah, many people out, creating their own side hustle that could later be a bank statement loan too. So
yeah, and we're talking specifically about second liens here, but I'll put a shameless plug in for a program we just rolled out less than a month ago, is that 1 year self-employed borrower, right? Now that doesn't qualify for a second lien, so I don't want to, confuse anyone out there, but and that has really hit the street running, that program too. And I think we did a webinar last week on that. So if you haven't received that recording, we'll email us and let us know. We'll get that to you. So Chris, we've talked a lot about marketing. Let's go to the portal, and unless you guys have anything else you want to share regarding seconds, anything?
They're going fast. We're closing them quickly.
Yeah. There you go. There you go. So let's go, let's go back to the home page. Now, what Mike and Chris always tell us is you don't need login credentials to get to that quick quote, right? That's a great thing. But in order to get access to our flyers, you do need it. So I'm gonna, sorry guys, I'm gonna log into the TPO portal here.
So we're, basically going to show you, we're here to help you market your business. Look at us as kind of like a partner. Like we're going to show you some marketing flyers, but we can actually go to an event. And like if you wanted to host realtors, we'll go there with you and be your investor behind the scenes to help talk about these programs. We're here to support you both, out in the field and for you to market your business. But one of the ways is what we're showing you right now, we're logging into our system, is that we have custom made flyers where you can actually put your logo on them, and you can market your own business with our programs that way. And we're showing you that right now in our marketing portal. You go to our marketing portal, we can give you access to the system with the user access form. But you can see in the list of documents here, we have like program overviews, we have specific program guides like that. We have a HELOC there. You can put your picture and your logo there and get those out to the partners that you work with.
Yeah, I think it's critical here. You can see as Brittany filled this out, and what's great about Brittany filled this out for this bank statement HELOC, her information comes up on all of the flyers, and you can see from this drop down, we have a lot of flyers out there to help you, right? So here's Brittany's information again. It's on our bank statement flyer. So so Chris, talk about, we've got the portal here. Talk about, how you've seen your partners use social media.
Yeah, I think social media, I mean, we're using social media. I think everybody is to promote their business, but we also have custom links for that for you to promote your business. And we encourage you to do that as well. Land, sea, and air, we're here to help you in every possible way to market your business.
Yeah, and we're not, we've put, one of our AEs always says, it's Angel Oak has invested a lot in your success as a loan officer. And, you don't have to reinvent the wheel. We've already created the image, the content for you to use to market yourself. And I would challenge anyone on this call to really go out there and try one of these or all of these, try all of these marketing devices that we have for you to just open up some new doors for you. And then lastly, Chris, you were just touching on it, is our realtor presentation. Talk a little bit about that. Mike, I'm going to have you jump in here in a minute also to talk about some of the success stories you've seen doing realtor presentations.
Well, the first thing I'll say is I think I could be wrong, John, but it is like maybe 25–30% of our entire bank statement portfolio realtors.
Almost 10% of
10%, okay.
Of the bank statements we close, whether it's 1099 bank statement or P&L, is 9%. Yes, Chris.
So that's a big percentage of a type of job. And so when you're reaching out to your realtors, if you're doing a realtor event, what I always find is at least one of those realtors ends up being a bank statement loan. I actually did a presentation a week and a half ago, and we have a quick call from a realtor already, just from the realtor presentation.
Look, do the math, Chris, right? If you get 12 or more realtors in a room, you're probably going to get one of their loans.
And you think about the realtors, they believe in real estate, they know real estate, they're not afraid of real estate, so they want to expand their own real estate business. But once they become a believer, they're going to market your product for you. I mean, it's such a great opportunity, a win-win for everybody.
Yeah, so Mike, So tell us about a success story that you've had with, doing a presentation on behalf of your loan officer.
Yeah, so I actually did one of these about a week ago with one of my brokers. It wasn't just stick everybody in a room, kind of stuffy, stand up in front and give a presentation. We actually went to Topgolf, and we got one of those private event rooms. We had some fun, had some food, had some drinks, and then at a certain point, I stepped up and on behalf of my broker, gave a short form realtor presentation. And she told me afterwards that she wants to do this every single month. We had a videographer there. We created a video, and it's been really well received.
Yeah.
So I think it's just a great option. There's a ton of ways you can do it. Just get with your account executive and let's make it happen.
Yeah, and Mike, I don't think people take advantage of it. A lot of people, we did the poll here, 57 have not closed a second lien. And we've done these webinars for the last 3-4 years. And it's usually like 60 or 70% haven't originated a non-QM loan. And once you educate your referral source on this, I was at one last week, in Texas, and the information, and in fact, Brittany's information was there. She was the loan officer at that realtor presentation. So if we get large numbers of loan officers not using this, imagine what that referral source, and whether we like it or not, they pre-screen buyers, right? They pre-screen them. So anyway, I know we're about a half past the hour. Just some people have asked. I put my email contact information in the group chat there. So if you need to look for your account executive, I will definitely get you in touch with that person. Or if you need a previous recording, if you want to be specific, or I can send you the link on where they're all held. But I take advantage of our account executives. They go in there, they don't say anything about Angel Oak. They'll present on your behalf. You don't have to be that non-QM expert. Mike, Chris, they are the experts, and all the other account executives across the country. So this, again, this is being recorded. This will be sent out before end of the day tomorrow. Mike, anything in closing that you want to share?
Yeah, I would say, guys, you're all here, you know about non-QM, you're learning about non-QM. You would be surprised how many people don't. Like I said, that realtor group that I was with, and this is pretty much every group, and I'm sure Chris can say pretty much the same thing. You'll be surprised how many people have no clue that this exists, have no idea that they have these options. We're so far into it that we kind of forget about that. But there's a lot of people out there who need these products. Their clients need these products. And so it's important to learn this. It's important to share it so you can get their business and help them along the way. And, they're great referral partners down the road.
Yeah. Well said, Mike. Chris, anything in closing?
Well, a little bit dovetailing on what Mike said is the ones that know that they exist don't have the confidence or think that it's kind of pie in the sky and it doesn't get funded. And that's what we do every day is we fund these loans, and they're predictable. We've made this process so bulletproof and organized. We have it down to a science, and it's just a great product. And you're reaching out to self-employed borrowers who take risk. They're the ones buying real estate right now, and it's really good to become an expert in this type of product. Let us help you do that.
Yeah, Chris, well said also. And 2023 was kind of a rough year for everyone, right? And I think what we're seeing is, rates may not come down until maybe, I don't know, I'm not an economist, but they might not come down to the end of Q3 to beginning of Q4. Who knows? But I think with these tools, not just this, well, I think the second liens can definitely, and I'm going to steal your dormant customers, not be dormant anymore, and create your own business and not wait for inventory to loosen up, right? I mean, I think this is a great tool. In addition to all the other great programs that Angel Oak has, like your self-employed borrower, your debt service coverage ratio, your 1 year self-employed, your full doc avenues too. So we've got a lot of tools to help you really, really grow your business in 2024. And for the first 2 months of this year, I am extremely optimistic about what's going on here, not just at Angel Oak, but what I'm seeing in the business. So anyway, want to be respectful of everyone's time. Mike, love having you on here. Chris, always a solid pro. And just on behalf of, for any of you that have closed a loan with Angel Oak, thank you. We really do appreciate your business. For those who have not, give us a shot. Let us help you grow your business too. Let the Mikes and the Chris's of the world go out and represent you like they represent us here. So on behalf of everyone at Angel Oak, thank you today for your time. Again, this recording will be sent out before end of day tomorrow. Look forward to, I think next month we got a couple other webinars to do too. So look forward to those. And if you have emailed me, I sent my email through the chat. I'll get you in touch with your account executive, or I will get you a copy of the previous recordings. So Mike, Chris, thanks a lot. Thank you everyone for joining us today. Appreciate it and look forward to helping you close more loans in 2024. Have a great afternoon.
Thank you, John.
Thanks, guys.